Hello there. While crude oil is dropping hard, precious metals are actually doing pretty well. In this video, we're going to cover both gold and crude oil, and welcome to myfinanceteacher.org. Starting with the precious metals, looking at gold. As I mentioned many times in most of my videos, gold usually follows these intermediate cycles, which usually last for around half a year. Within those, we see several, sometimes only a couple of shorter term daily cycles, which usually last for around a couple of months. Looks like a few days ago, on the 28th of February, we have seen the end of the daily cycle. So let me move this arrow over here, indicating a daily cycle that finished lasting for 72 days. Now stretching this arrow to today and to the beginning of the intermediate cycle, we see that the intermediate cycle is now 111 days long. And as they usually last for around a half a year or so, we're probably already around the midpoint, or perhaps already beyond the midpoint of this ongoing intermediate cycle. Although the cycle midpoint, in terms of its actual duration, doesn't have to align with the peak in the cycle. The previous cycle, for example, had its peak far further to the right, far later than its midpoint. But sometime past the midpoint, some caution is already advised, and I think this ongoing intermediate cycle is likely to peak within this new third daily cycle that has just started a few days ago. So what I expect in the next several weeks is a continuation higher into this third daily cycle rally towards that magical round number of $3,000. Perhaps a bit of a false breakout above that $3,000, as the markets usually tend to hurt as many inexperienced traders as they can. A breakout above $3,000 might actually lure in those last traders that are throwing in the kitchen sink at the precious metals, and after that we can see a decline down into the daily and as well as the intermediate cycle low later on, especially as I have here into May, June. You might actually heard the saying sell in May and go away. That does apply to the general stock market, and it also often applies to precious metals as well. So in the very near term, I'm still positive on precious metals, but in the intermediate term, over the next perhaps couple of weeks, quite a bit of caution is advised. And looking backwards over the last few weeks, we've managed to reduce our cost basis with this short-term dip. That was somewhat risky because there was no guarantee that I would be able to repurchase the names I was selling near the tops. The names such as Goliath, First Nordic, there was a Nucor, there's Artemis. For much more details on those names and other most promising juniors, make sure to join us at myfinanceteacher.org. All the trades, even the ones I've just mentioned, are shown in the model portfolio, and perhaps one of the most interesting categories for myfinanceteacher.org is that category Juniors in Metals, where we discuss those most promising juniors that are going to add that huge torque to your portfolio, with precious metals themselves, the commodity itself, rising again towards $3,000. Next, let's move on to market sentiment. Still looking at precious metals, gold in this case. It's important to look at market sentiment because, as someone said, was it Warren Buffett? Perhaps it was somebody else. Buy when there's blood flowing on the streets. In our case, this could be, say, proverbial blood when everybody is pessimistic. That's what the market sentiment shows. In this case, we're looking at the optimism index. When it's down through the floor, down close to this green line, that's perhaps the time to get greedy and purchase whatever asset you are looking at. And whenever everyone is too excited, we're above this red line, that's perhaps the time to exercise some caution. This market sentiment itself also fluctuates through much longer term cycles. We see 2021 Good times when the intermediate cycle lows are accompanied with this market sentiment only dropping to the level of mid-40s. Hard times in early 2022. In 2022, when the intermediate cycle lows in gold are accompanied with this market sentiment dropping down through the level of 30 and below. We are clearly currently in good times for precious metals. Zooming in a little, the previous intermediate cycle low came with the optics somewhere in the mid-60s. That's really high for an intermediate cycle low. A recent drop from above 80, from around 84 to a recent 71 is probably enough, as I mentioned, for a daily cycle low. We're likely to push higher into the third daily cycle over the next few weeks. But again, after that, a significant correction down into the intermediate cycle, and perhaps over these next few weeks we might see a bit of a negative divergence, maybe a lower high on optics versus a slightly higher high on price. Next, moving on to crude oil. Crude oil has performed terribly since mid-January. The ongoing cycle is now 176 days long. That's a bit longer than usual, and that is to be expected. After all, over the last couple of years, the average duration has been somewhat shorter than usual. The previous cycle was relatively short. The one around the middle of 2022 was very short as well. The two in between, they were a bit longer than usual. The usual is 159 days since the middle of 2017, but overall, over the last couple of years, we have seen average cycle duration below this typical value of around 160 days. So it's only natural that we're now observing a longer than usual cycle, bringing that average duration back towards the typical. I do observe that quite often in my experience. So if we haven't actually seen the cycle low on crude oil yesterday with this reversal hammer candle, then we're probably likely to see that cycle low on crude oil over the next 1 or 2 weeks. Usually these cycle lows are accompanied with pokes, multiple pokes below wide Bollinger Bands. We do see already a couple of significant pokes, but the Bollinger Bands could get wider to make it more of a significant poke. Now, perhaps over the next 1 or 2 weeks, as I mentioned, those Bollinger Bands could get wider and crude oil pokes once more below those bands, indicating a cycle low. Time will tell. Generally, in the intermediate term, if not in the short term, in the intermediate term, I do expect crude oil to start rallying into a new cycle. After all, looking at market sentiment on crude oil, it's down. Is it down through the floor? It's not through the floor, it's pretty close to the floor. It's now at 36. We see that in good times, again as in 2021 and early 2022, cycle lows on crude oil are accompanied with the market sentiment just dropping a little bit below the level of 50 down to the level of 40s. In hard times, as in 2023, cycle lows on crude oil are accompanied with this market sentiment dropping down to the level of 30. Again, zooming in a little, we're currently not in good times for crude oil. The previous cycle low came with this sentiment dropping all the way down to 35. We're now at 36. So yes, there is still some space to go even lower, but there is also some chance that we've seen the cycle low yesterday. So generally crude oil is now in the process of forming that cycle low either yesterday or over the next couple of weeks. So perhaps taking advantage of that upcoming cycle low, maybe getting into some positions, isn't a bad idea. Although remember, this is not investment advice. I simply share my views with you. For much more on precious metals, uranium, and some of the other most interesting asset classes, make sure to join us at myfinancesteacher.org. The model portfolio here shows all of my trades, and perhaps one of the most interesting categories on our website is juniors in metals, including some of the names I mentioned a few minutes ago in this video. Much more details on those names and some of the other most promising precious metals juniors are in this category. at our website myfinanceteacher.org. Have a wonderful Wednesday. Bye bye.